Hello traders, hello everyone, and welcome to our special edition. As you know, at the end of each year, I always go through a lot of charts. I will scan higher time frames, charts, and cycles, and we'll try somehow to link everything together and what I may expect in 2026 based on sentiment, based on poor price action, basic technical analysis, and of course the Elliott wave structure. At the end, of course, we always try to link everything with economic cycles and policy decisions. So I will walk you through a lot of markets, a lot of the most important assets, and we'll try to keep you on the right path going into the 2026. Now, as always, because I think that that's the special time of a new year when a lot of traders maybe could join our membership premium services, especially if this video will be very useful for you. If you will find a lot of information here, then of course I want to keep you track through the whole year. So I'm basically, as always, we are giving 40% off with the code EW2026. So you get 40% off on a yearly membership plus additional 1 month extra, as well as Elliott Wave school educational videos for those who never took these educational videos before, and they will get this for free. Or because I know that maybe you don't want to commit for 1 year, but maybe still you want to test our services. Basically, if we also have for a monthly membership 14 days free trial, and if you will apply for this today, then after 14 days will expire, you can get our services on a monthly basis on the first cycle for 40% off. So this 40% off is for both yearly membership and now first month as well. But additionally, because I know that you want to try our services maybe first, the 14 days starts with absolutely free, no costs. And this offer will be available till January 11, 2026. Also, keep in mind that the charts that I will show you and all the presentation that I'm doing, this is sponsored by Eightcap. So if you're looking for a new broker, they have a 30% deposit bonus. Also, they have prop style challenging accounts, daily trading challenges as well. So if you are interested to explore more, make sure to click on the link below this video. Now, let's start with the first chart here, which is basically the US yields. And what's interesting, at least for me, is that despite this, a lot of dovish views, dovish expectations, and expected cuts, somehow US yields are still sideways. We are not seeing much of a lower price action here. So my assumption is, or concern, that there is a real chance that we will see a potential new push higher based on the Elliott wave terms. Why? Because we have here, as you can see, a very nice ABC decline in the first leg from the high. So usually when you see the three wave structure from a new high, that's indication that we are already completing a correction and we are headed back to the upside, or maybe it's part of a more complex correction. So in my opinion, I think that this could be part of a triangle here in a wave 4. So despite all of these cuts that are going on, despite of this jobs unemployment that recently ticked a little bit higher, there are even more chances they will cut further. But so far markets, is not moving to the downside that much here on the US yields. So I'm afraid that maybe when Fed will be maybe reach the point where they could maybe stay on hold, because inflation, by the way, is still well above 2%, right? And if they will be keep cutting rates, it could happen that inflation could go back to 3% or even higher. And in such case, they will say that they are done with cutting rates. And what could be the result is that basically dollar could rebound. At the same time, stocks could also face a correction if Fed will give us any hint that they could possibly be on a hold. And at the same time, what may happen? Well, it's interesting to say that commodities could weaken, because if they will have high rates, well, demand could basically drop if rates will not, if they will not cut rates moving forward. So I think that it's something that we have to consider, especially because when I'm looking at this whole wave structure here and trying to connect it with the dollar index itself, it basically shows that dollar index has seen a very nice big drop here, as you can see, but the 10-year US yields are still stuck in this range, as I showed you here. So in Elliott wave terms, I think that there is a real chance that we will see a push to the upside into wave 5. And if that would be the case, then dollar index could possibly be looking also for the potential support. And you can see that the dollar index has made a very nice and big drop so far, and the US yields still are holding here at these levels. Also, you have to look at the dollar versus Fed cycle versus inflation cycle. You can see here that, firstly, if we take a look on the dollar index itself, we're basically still in a very strong upward channel, but notice that market is coming slowly to the lower side of this channel. I still think that there is room for more weakness in the first half of 2026, first few months, but then maybe we could see some stabilization at this lower side of this bullish channel. And at the same time, I'm looking here at the full cycles of two full cycles actually from the Fed. So you can see that the first full cycle was from around 2000 till 2003, and then we have seen another full cycle from 2004 or so till 2008. So that's the 10-year cycle. And basically, we are also now possibly at the end stages of this 10-year cycle. So if we are really approaching the potential, the potential idea that Fed is really maybe will reach the point where they could be on hold rather than cutting rates too much, then there is a chance that we are going to see a new cycle after this current 10-year will now finish pretty soon. And this could basically mean that maybe dollar will stabilize as well. It doesn't necessarily mean that they will hike rates aggressively. It's all about the expectations, what market will think. If inflation will come out higher, if they will say that or give us a hint that they are done with cuts, well, this could be enough for dollar to see a rebound with the US yields. And at the same time, we are also looking at the inflation cycles here, and you can see that we are possibly here now at this midpoint and could be at the lower stages, or the late stages of this potential inflation that is coming to the downside. It's still not really going towards their 2% target, and looks like that they're between 2.5% or 3% is basically what could be their new normal. So maybe we'll not see that much move down here on the inflation. And as I said, if inflation will again turn to the upside, there's a real chance that they are done with cutting rates. Market will expect that they could maybe even, who knows, move rates higher, and this could be enough for dollar to see a rebound. At the same time, we could see, as I said, stocks making a pullback. At the same time, commodities could see also weakness. But before we go to some other charts, let me also show you dollar index positioning. So we know that extreme in positioning is very important, especially when market went too far into some kind of extreme. It's very good to look at positioning COT data of fund managers, large speculators in particular. And what I see here is that we are at the extreme levels, even approaching to 27 back from 2007 2008 extremes. So in my opinion, this really tells us that dollar could be headed into some serious supports here in the near future. Of course, there's still room for another, let's say, 5%, 6% drop from here, but overall it really brings on a concern that we could see potential rebound. And if this positioning will change based on this extreme sentiment, then of course that this will also impact the other markets as well. So last year, if you were looking our analysis, and this for 2025, we also been looking at some of the COT data and said specifically and highlighted where dollar positioning and the euro in particular was 12 months back. And now it looks like that we are in the opposite side of this trend here. So my assumption is that we could see this positioning changing through 2026, and we could see then obviously a rebound or at least stabilization on the dollar. I'm not saying that we will see any kind of a strong rebound, but I think that dollar itself could stabilize. Also, from an Elliott wave perspective, market always is in a progressive mode, always move in 5 waves, then make a regressive mode in 3 waves. And if you look at this structure here on a monthly chart, you can see that we have 5 waves up followed now by 3 waves of a pullback. Now, usually this ABC retracement will take us back to the area of a previous fourth wave, which is here still far away, around 90. Or possibly we could be headed only back towards this pivot level of that previous triangle in the fourth wave, here around 95. Also, I'm looking at these declines in percentages. You can see that that was a 17% of a retracement. Then market have seen a rebound, stocks drop. That was 15% of a pullback. Then very nice rebound, stocks pulled back. And now we also have almost around 15% or so, if I'm not mistaken, a pullback. So it means that there's still room for another, as I said earlier, 5% or so, or maybe even slightly more before dollar could possibly be looking for some change in trend. And if we'll see a reversal back to the upside, this could mean that stocks could basically be headed into some kind of a resistance. So that's, keep in mind that this, of course, is a monthly scale. It can take even more than the next 12 months before this any kind of a strong rebound will occur. But I want to show you that we are really headed into some extreme levels based on positioning, based on the Elliott wave price structure, and based on the US yields wave count, which basically is not showing a topping pattern from an Elliott wave perspective. Now, also what is important is looking at the dollar index versus the S&P 500 ratio. So this one, of course, it mirrors the picture of the S&P 500, not tick by tick, but of course, this must be somehow correlated. So what we are looking at here, and what I think it's important, is that in Elliott wave terms, you can basically see that we could be having a 5 subwaves down within this wave 5. So at the end of 2024, when we made a video for 2025, we said that this wave 5 is still ongoing. It's not really finished, because wave 5 must have 5 subwaves within it, right? So we were expecting more weakness, and you can see that this weakness is now showing up here. It means dollar weakness, while stocks have seen a very nice and strong rebound. So in Elliott wave terms, again, after these 5 waves, we could expect that market will potentially stabilize, not necessarily move anything aggressively higher, but at least some kind of a correction could be seen then down on stocks, while the dollar could stabilize. Also, looking at the S&P 500 wave count to give you better, clearer perspective where I think we could be positioning here. So, as I said earlier, markets are always in progressive mode, right? It means they always will move to the upside. Stocks will always try to be in uptrend, because fiat is losing value, right? Because inflation is going up, prices are going up. It means that revenues from companies are each year bigger and bigger, higher and higher profits. And it means more and more money is available. And that's why you also see this is visible through the stock price itself, right? So that's why the stocks are moving to the upside, and they will continue move to the upside as long this kind of economic relationships will be here, which means that if there will be more stimulus, markets, fiat, will be losing more value, and that's what will keep stocks in uptrend. So whenever we're looking at the wave counts, it's always maybe important to look at some kind of a wave pattern that will allow you to stay bullish, but with the pullbacks in the meantime. So longer term, I certainly think and assume that stocks will stay in recovery mode, but I'm aware that there could be some retracements. There could be even 10% of a pullback, and this will cause a lot of shocks across different assets before the market may stabilize relatively quickly. So higher we go, smaller percentages we can experience based on a pullback on stocks. Now, in Elliott wave terms here, what we are looking is that we have waves 1, 2, extended red wave 3, sharp wave 4, and you're now in a wave 5. Wave 5 is a motive wave, should be structured by 5 waves, same like wave 3 and wave 1. So we should have 5 subwaves up, and if you look closely here, we are not having 5 waves up yet. So as long as we are trading here, let's say about 4,800 or so, I think that this is still a healthy uptrend. But we have to respect that there could be some retracement on the way up, especially when we approach this upper line of this impulsive channel. So if we look even at the subwaves on a smaller scale of this black wave 3 degree, this one should also be made by 5 waves, right? So basically that's a wave 1, wave 2, extended blue wave 3, sharp drop for a wave 4 caused by Trump tariffs, and then we have seen a sharp reversal now back to the upside based on these cutting rate expectations. So keep in mind that market has made a very nice and big move to the upside based on their Fed dovish cycle. So when this dovish cycle will come to an end, especially if they will cut too much and inflation will go higher, they are done. And what market would do? Market will make a pullback. At the same time, dollar could see a rebound. At the same time, because demand could drop, if the rates will not go lower anymore, what will happen? Well, commodities can also move to the downside, despite US yields pushing higher based on expectations. Now, here in the near future, we also see some room for more upside here. As I said, also dollar has some room for more weakness as well, as I will also show you on some other charts. So because I'm saying this, because that's very important when I'm looking at the charts, because I'm not expecting this kind of a development to materialize, let's say, in the next month or so. In 2026, we could see these cycles changing a little bit, but of course there's still plenty of time and maybe even room for further upside here on the S&P 500 before we complete this blue wave 5 degree, ideally around 7,000. Maybe even the next level, extended level, is at 7,470, which is the 200% extension of that wave 4, while the first resistance is at 7,000, comes in at 161.8% extension. So what ideally will happen is that market could experience this kind of a pullback. As I said, could be around 8-10%. Still would be total fine. I think that if we see this retracement, very nice, very strong support could be around 6,150, which was that high from, I believe, from the beginning of this year or end of 2024. Now, also, what is important is our emerging markets. So last year, if we're looking our analysis, when we were highlighting a bearish pattern for the dollar index, we of course were looking at the emerging markets, because what we noticed is that we have a very nice, beautiful bullish pattern. So not only the dollar index itself was showing a potential resistance, we were looking at emerging markets, developing countries, where we spotted a very nice triangle formation. So that's when I was even more confident the dollar index could really see more weakness, because if dollar is losing value, if rates are coming to the downside, what is happening? Well, this money is flowing abroad, and that's why you are seeing move to the upside on emerging markets. And what I think it may happen is that if dollar is really coming to the downside, maybe we'll hit support between 90, 95, 94. What may happen is that at the same time, emerging markets could also see some kind of a resistance. So I still think that there is room for more upside towards these highs from what that was high, I believe, from 2021 or so. So we could retest this before market may experience some pullback. So you can see that there is room for more upside here on the emerging markets. There's also room for more upside on the S&P 500. Even dollar itself has room for a bit more weakness before may stabilize maybe in the second half of 2026. Also, not only dollar positioning, maybe it's not a bad idea to look at the euro positioning as well. Now, last year, we were looking and called a bullish reversal for the euro, because from that 2022 lows, we had a very nice move to the upside, called a free wave drop here, close to one parity. And then we expected a rebound. And the reason was because we had a free wave contractant movement, so ABC drop. At the same time, the positioning was at extremes. Okay, so large speculators were heavily short, meaning if market is again moved too far, then we can expect that sentiment will change. We don't know for sure going into the future what will cause the change in sentiment, but that's how it works. Market will always move in sentiment. Crude will always Crude pattern will always be visible through this pattern, through the sentiment. So I think that this sentiment is and positioning is very, very important, because it could tell us in which kind of a stage of this current direction market is. And right now, I think that positioning is moving to extreme. So there are extreme longs on the euro dollar. You can clearly see that we are approaching to levels from 2018, 2020, 2023. So maybe now in 2026, we could see these levels retested, and then possibly what it means, if we are moving into the extremes, that market will reverse and do the opposite. Again, doesn't mean that it will collapse. It means that it could, at least bulls on the euro could slow down. Now, also, it's not a bad idea to look at German and US yield differential. Now, what I think here it's very important is that you can look also at the cycles, right? And here you can see that based on cycles, when you look here at German US yields differential, that we could be now at the end of these current bull cycles. So if that's really the case, then we could see also that euro will reach the top as well if this cycle will change here, because that's what has happened here in 2024 of January, then 2024 September, then April 2025, and now we are again in this very late stages, this potential bull cycle. So I think that again, when the US cycle, dovish cycle, will maybe give us a hint that there could be approaching the end, it could be enough just one message from central banks, not necessarily actions, and it could be enough for spark for market to make this change in cycles. So when the US cuts are done and the US yields could 10-year US yields potentially could break to the upside, then what may happen is that basically we will see this reversal in trends. At the same time, the US dollar will be much more attractive if the US yields will rise to the upside, while compared to the one in Europe, in Germany in particular. So this could then obviously also change the trend around for the euro dollar itself. It means that we could see a reversal back to the downside here. Now, in Elliott wave terms, as I said earlier, I'm expecting dollar to see more weakness, and looking at the euro dollar wave structure here at the daily charts, well, I'm also looking and seeing potential room for more upside, for another push higher, maybe closer to 1.2, maybe even 200 pips higher before market potentially will reverse lower in a few months from now. So here I'm looking wave 1, wave 2, extended wave 3, wave 4, and expecting wave 5. So why I'm expecting that we'll see another push to the upside? Because again, like I said earlier, if you can, you should always try to level the wave count so that you can stay with the trend. Okay, even if this trend is just temporary, give you just smaller room for potential gains before it will possibly turn to the downside. So here what I'm looking at is that we could be in a wave 4. It's always important to label this as a correction if market is not going anywhere. And that, in fact, in B wave was free wave move to new high, and even that drop in a wave C was corrective. If we are in our Monday's webinar, you specifically will know how we identified these patterns over the last few weeks. And you can see that so far, since we have seen this very nice bounce, it makes me even more confident that this could really be a continuation pattern and that we could see more upside. So one more push to the upside could show up. And what is important here, if we will really have a triangle that will unfold in the next few weeks here and push the prices higher, keep in mind that triangles occur prior to the final move within the larger trend. So it means that you will see the final leg to the upside, possibly then wave 5, and you would expect an ABC drop. So again, if we will see new highs here, keep in mind that this could be a fifth wave and that market could reverse, and then we could see all of these pieces coming together, as I showed you with the US yields. When the US yields will break potentially to the upside, that's when you could see potential top on the euro dollar. At the same time, stocks could make a pullback as well. Now, if the euro dollar will possibly run into resistance, keep in mind that I can see some commodity currencies still showing a pretty nice and solid wave structure. But if dollar would see a rebound, maybe at some commodity currencies versus US dollar, it might be that much attractive, but instead some crosses could be very volatile and very interesting. And what I'm looking at here is that we have potential very nice top cycle forming right now. So I'm thinking that if the euro dollar would really potentially move into the resistance, that there could be some opportunities on other stronger commodity currencies versus the euro, and I would not be surprised to see maybe euro turning to the downside, not necessarily making a very big break to the downside, but that's maybe something to consider. It really depends what may cause potential limited upside on the euro, and then maybe we can better identify potential reasoning why the euro Aussie could also move lower. But based on just simple cycle analysis, it really tells me that we could be moving to the upper side of this range, potentially ready to turn, especially because these kind of cycles will not have just straight one line to the upside. Usually you will see something like this in cycles from the one extreme to the other extreme, and that's something that I would be watching on these pairs and other similar pairs as well, like maybe even pound versus kiwi or so. Now, let's take a look on commodities. So as I said earlier, if Fed would be done, if they will hint that they are done with cuts, then market could and inflation comes higher, around 3% or even more. Then what may happen? Well, market will say, okay, well, maybe it's time to move with rates in the opposite direction if you want to bring the inflation down. Because by the way, inflation is still high, above their target, but they are keep cutting rates. So what will actually happen if they will rise rates, or even if the rates will, even if they will stop cutting rates, what may happen is that still demand then in 2026 could basically drop. And what this means is that commodities could also see a retracement, could also see movement to the downside. So it's also important to understand that if commodities are moving to the downside, it means that dollar will likely rise. Okay, so if dollar rise, commodities are cheaper, and that's the correlation that we have to consider as well. So in Elliott wave terms, of course, what I see here is a very nice 5 waves down, followed by sideways price action. So this to me tells us that we could see a move to the downside here still after maybe some kind of a more consolidation here for a wave B triangle, but then watch out for a drop here into wave C on this Goldman Sachs commodity index. That's not the only one. We also have a Bloomberg commodity index as well. Of course, it has different weights. Some it more depends on energy, while other is not. So, but again, both are showing very similar story here. We have 5 waves down, and now the counter trend movement already moving into some kind of a resistance here. So this one as well suggests that we could see a new reversal to the downside. Of course, there's still room for much more upside here in the next few weeks, few months. But just keep in mind that that's the bearish Elliott wave pattern, where you have 5 waves down, consolidation, 5 waves down, rally in 3 waves. So, my opinion, there is risk that we'll see a reversal to the downside, and if commodities will come to the downside, dollar could rally. Now, that doesn't necessarily mean the case for gold. Okay, so gold, as you know, could stay bullish even if inflation will come higher. Gold could be as inflation hedge, could see more upside unless they will hike rates. Then even gold could come to the downside. Then you have gold that could move to the upside based on geopolitical risk. Okay, so there's a lot of segments where gold could benefit. But again, from an Elliott wave perspective, we are seeing, and from sentiment perspective, we are seeing gold at some of the extremes here around 4,000. Maybe you notice that silver is now leading the way to the upside. Gold is lagging. Even platinum, palladium are breaking higher. Gold is still lagging. So, in my opinion, if those that are now breaking higher will see a pullback, metal, gold will also see some kind of a correction. So gold itself will still give us, I believe, some very interesting opportunities to join this trend, but it's very important, based on what I'm seeing here, that we are careful and expecting some kind of a retracement rather than chasing the markets here. Even if we see straight push to the up to 5,000, I think that much better opportunities will still show up whenever this wave 4 will unfold. We don't know from where exactly this wave 4 will unfold, but you just have to be patient and maybe write the next leg after this pose. And when opportunities could show up? Well, again, if we look at the US yields here at the bottom, well, that's a very nice, beautiful pattern. And as I said, yields are still moving just sideways despite these dovish expectations and cuts. So if this story will end at some point, US yields could basically move higher. And if the US yields will break higher, it means that gold will have a potential pullback. And also look at gold volatility. You can see that gold volatility is at the top. As you know, we have seen a pretty strong push to the upside. So for a cyclical opportunities, you want to see that volatility for gold will now calm down before you may write volatility that will take the price higher later on. So we are waiting on this, and we'll be watching this volatility index pretty closely, because that's when opportunities could show up. Ideally, when we have a wave 4, the US yields comes to the upside, the same time volatility for gold will drop, and that's when, after this pause, this which could last for a few months, that's when we would be expecting a next leg higher. Also, here I shared this chart at the end of 2024 as well. We were very bullish on metals. We said, look, if market is really expecting cuts and if Fed will really cut rates, that's the next push to the upside for gold. It's been the case, as you can see here, back in 2007 when they were aggressively cutting rates. The US yields on 2 year, as you can see here, was coming to the downside. We have seen a very strong push to the upside on gold. Here was in 2019 when they had a dovish cycle. We have seen a very strong push to the upside on gold. And then up here, when we reach this resistance, same level on a 2 year US yields from 2007, it was the upper limit for the market. And what market was expecting is that they will basically support the economy. They will be looking to cut rates, and we have seen a very nice push to the downside, and that was the trigger for this aggressive push higher, in line obviously with geopolitical tensions as well. So we have seen a very nice movement so far here. But again, if inflation will stay here or will not move closer to 2%, but rather back above 3%, if it will be stick around 3%, what may happen that they will stay on pause with potential cuts going forward. And again, if cuts will be on pause, also gold could be on pause as well before the next opportunities could show up. Also looking at silver, it's outperforming gold based on a gold silver ratio, and here it's still also in a wave free like gold here. We also see silver in a wave free. Of course, it's hard to say when when silver will top out. But what we see is that we have an extended lag here to the upside. Currently, the 261.8%. We could easily see $70 or $75 for this wave free. But whenever wave four pullback will show up, that's when new opportunities could occur. But why I think that metals will still generally stay in uptrend, because what we see here is that gold silver ratio is trading to the downside. We are still not at 2021 lows. There's still room for more weakness. If we will see some kind of a rebound here or change in cycles in the near future while we are still holding these 2021 lows, well, it would be even more interesting and powerful for potential further sell-off later on, which means that silver could be still ready to make much more upside and will continue to dominate the metals as long as this gold silver ratio is in downtrend, which still has a plenty of room for lower prices. Now, also, let's take a look on crude oil. So crude oil is, as you know, very important for measuring the inflation. But keep in mind that inflation, no matter how deep to the downside crude oil came recently, the inflation is still higher. And looking at this wave count on crude oil here, my assumption is that here back in 2021, 22, we finished one full cycle here of an ABC movement, right? Followed by this recovery. So what I'm thinking is that we are now in a new bearish cycle that should then also unfold in three waves. But of course, even if we are in a bearish cycle, you would expect recoveries in the meantime. And what I'm looking at here, that we are still possibly in wave A of the three wave drop. So I think that crude oil will stay weak, and it could stay weak until US will start aggressively filling their reserves. So you can see this on the bottom of this chart. You can see here that US reserves are very low compared to levels between 2010, 2018, 2020. So lower the prices it will get, well, maybe they are willing to fill more reserves because crude oil will be cheap. And then what this may cause is, if there will be a very big demand from them, or let's say around $40 or so, this could cause basically that market will then rise in the future when they will keep buying crude oil at lower prices, and then they will try with the demand they will cause a rebound on the prices. But when possibly the reserves are full, well, and the price is higher, well, what may try to do is they will try to get rid of oil, and obviously this could possibly cause that price will get lower because they will try to get rid of it. So that's something that could be very useful when looking at the correlations between US crude oil reserves and crude oil prices. And what I think it's happening here, as I said, that we could be in a wave A. Maybe the prices will see even more weakness in the near future. They will try to fill their reserves even more, and this will later on cause some rebound for a wave B. But overall, I'm expecting more weakness here later on in a wave C. Also, now if we are in a wedge here, maybe some stabilizations could occur maybe already in February or so of 2026. So definitely something to watch for. But as I said, we are still in a bearish cycle, also because commodities, in my opinion, also have room for more weakness. Now, the final market that I want to cover is obviously Bitcoin. So Bitcoin, as you know, cycles worked perfectly. We've been looking for this cycle analysis already like 2-3 years back, I think, and we highlighted that each bull run since 2014 or so lasted for exactly 3 months. The corrections lasted for around 12 months. So 3 years versus 1 year of a pullback. And you can see that that was the case here. And then also from 2019, we have seen another 3 year bull run, and then 12 months of consolidation into 2023. And now from that low at the end of 2022, start of 2023, we have seen next new recovery, right? And this recovery so far is been exactly 3 years. So in my opinion, we are at very late stages where Bitcoin is slowing down. We can already see this happening. We can see this on the price charts with some aggressive selling that occurred recently, despite stocks being bullish. So that's the main concern. If the dollar is really maybe will try to stabilize in 2026 around, but still room for 95, maybe 94, maybe even more, lower, it means that whenever we see stabilization on dollar and some rally, it could cause more weakness on cryptocurrencies. At the same time, if stocks will see a retracement, well, in my opinion, then Bitcoin, which is very weak already now, could experience much bigger decline. But as I said, we need 12 months of consolidation for much better potential opportunities to catch the next leg to the upside, especially if the price in the 12 months, in 10 months from now, will be trading at the support slower, not higher. That's when opportunities could show up, when you have cycle and the price pattern matching up. So in my opinion, as I said, still room for this correction. Also, each of the previous correction was around 80%, 70%, 76%. So we don't know if this correction will be also that deep, but as I said earlier, higher the prices, lower the market in general, lower will be the pullback in percentages, right? So it's not necessarily that we will see 80% of a drop or pullback on Bitcoin. Could be maybe just 50% could be enough, but still quite a lot if we consider where the price has been trading recently. And I see a very nice support here around 60,000, 65,000 for 2026. Now that's from cycle analysis. Now, what about Elliott wave analysis? Well, as I said, markets are always in progressive mode. They will make a pullback, regressive mode. And now I think we are moving into stage of a regressive mode. So that was very nice sharp push to the upside for wave 1, wave 2, nice 5 waves up for wave 3. It was an extended structure. You can also count 5 subwaves within this wave 5. We are breaking out of the channel, and that takes us into this new cycle of a sideways price action before market may resume higher. So as I said, these levels down here could be pretty attractive, but again, only if the cycle analysis will also show us that we are approaching this potential bottom here, the end of this fourth wave. So I would be expecting another push to the upside after this pose. Also, this is the only on-chain data that I want to share with you. So these are the Bitcoin long-term holders. So whenever long-term holders are start selling in a loss, that's when you know that you're really at the extreme of pessimism, where the market could possibly stabilize later on and reverse this trend when no one expects. And that has been the case here. I don't have real dates here. I can see them really nice. But anyway, it was the case here. As you can see, we had long-term holders selling at a loss because the value was below 1. So basically here was the extreme sentiment here as well. As you can see, the before market rebound, we also had experienced these same situations few times in the past. But now if you look at the current data, right, we are not at the extreme. So we have to see this data moving below 1, level of 1, because below 1 is the level where it tells us that they are start selling at a loss, right? So we are waiting on this more weakness, and possibly this data is telling us itself, because we are not at this kind of a stage yet, that there's still room for prices to correct lower. Price should still drop further for more traders, investors, long-term holders to be liquidated, right? So whenever we move into this extreme, especially if Bitcoin will itself move closer to 50,000, 60,000, I think that if the data will be showing us that we are in that red circle down here, then I think it will be very, very interesting for potential new reversal later on in months afterwards. Okay, traders, thank you very much for watching this video. Please, if you love this video, make sure to press a like, subscribe to our channel, give me some feedback on the comments below. Let me know if you have any questions, and of course I will be watching these charts and also shorter term time frames as well, what is happening on a weekly, daily basis. We are covering this in our premium services. So again, I invite you, if you're interested, you can apply for 40% off with the code EW2026. For a yearly membership, you will get 1 month extra free. Or also, you can take advantage of the monthly membership. Firstly, you can apply just for 14-day trial, and then if you will be satisfied, of course, you can resume the first cycle with the 40% off. So traders, good luck next year. I wish you very nice holidays and talk to you soon. Hope to see you in our webinar each Monday in 2026. Good luck. Bye.